as traders at Axis Bank see their improved offers across the bond curve, especially the 2028 maturity. And for the T-bill side, focuses on longer dated papers with very few bids to match. Tobechukwu Ikpe, Treasury Team Member at Axis Bank, joins me now for more market updates. Tobechukwu, thank you so much for joining us on the show today. Let's start off really now with liquidity levels, system liquidity in the market, following the CBN's directive in terms of the lifting of the cap on FX rates quoted by IMTOs, and also the order for banks to sell excess stock, dollar sales as well. Let's also have the market reaction to all of these and liquidity levels as we speak today.
Okay, David, thank you for having me. So we saw turnover in the FX market improve following the circular released on Wednesday about the lifting of the cap on rates for IMTOs and about the limits on the NOP for banks. So basically what the CBN said was that they imposed some limits that banks cannot be more than 0% long in their open position of their foreign currency assets minus liabilities to their shareholders' funds unimpaired by losses, although they can go up to 20% short. So what that means that they have to, if there's any bank with a gap, they have to close that gap between their FCY assets and their FCY liabilities. So consequently, we saw improved turnover in the market yesterday and on Wednesday. We saw turnover average $150 million over those 2 days, which we've not seen since the beginning of the year, where the average turnover for FX was about $50 million. So it's obvious that there was some improvement in dollar sales from banks.
But for you, how long will this last, really?
How long? It depends on how sustained this dollar supply can be, because that has been the primary issue affecting the FX rate in Nigeria. So everybody always says the issue is supply, supply, supply. If it's a demand and supply game, if the supply is there and users are confident that they can get their dollar at any time at a reasonable rate, the rate will moderate over time. So we'll see how much the effect can continue to play on. For now, we've seen a moderation in the activity. Opening today, we saw the rate trade around 1,450 today. So it's like the activity has slowed down a bit. But next week, let's see how the market trades. We've still seen some trades going through today, unlike previous weeks. So there's still some activity, but we never know how it's continuing to go. The CBN may need to continue to think about more creative policies as they've done to maybe continue to drive that supply into the market.
Some have described this move as tightening the news over here. But now let's move on towards how we should also see investors lean across the T-bills and bond curve in the week to come.
So for the week, for this week so far, this week is closing due to the tight system liquidity levels, opening at negative $307 billion to 307 billion naira today. We've seen markets a bit tight in terms of banks made to fund their obligations. So we've seen offers dominate the T-bills and bond space. Market has been bearish across those two buckets. So we saw the 38 bond, the on-the-run paper that was offered at the auction on Monday, being offered as high as 17.1 today, after it closed at 16.5 at the auction, and the on long-dated T-bills also being offered at elevated levels. So going to next week, we expect that the next week will open with cautious trading as usual. There's an NTB auction next week. Market players, interest rate expectation for market players is that rates are on an upward trend right now. So market players won't want to take any positions that might bond them later. So they'll just be on watch and see approach if there's anything that changes the sentiment in the near term.
Tobechukwu, thank you so much for your insights on the show today. It's been a pleasure speaking with you. That was Tobechukwu Ikpe, Treasury Team Member at Axis Bank.